So credit card churning, is it a great way to score free points and get a free trip? Or are there some downsides that might give you pause about going through that approach? I'll go over what credit card churning is, some of the downsides, and the approach I'd take to try to minimize those downsides with those sign-up bonuses. Alright, so what is credit card churning? Credit card churning basically involves a situation where you continually set up new credit cards just to get the sign-up bonus. Now the way this works is that each credit card will have a sign-up bonus typically. That sign-up bonus comes when you reach a minimum spend threshold, typically a few $1,000s over the first few months after you've set up the card. Now what credit card churning involves is you set up the card, you make that minimum spend, then you'll cancel the card and you'll set up a new card, get the minimum spend and the sign-up bonus for that new card, and so on and so on. Now there's a couple of things to bear in mind here. Firstly, when you set up the card, you'll need to make that minimum spend to get the sign-up bonus. Second thing to bear in mind is this churning approach typically involves cancelling the card. And the reason for that is the third reason is that for each credit card provider, so each bank, they'll only give you a sign-up bonus once every 24 months or 36 months or 48 months, or however the case may be. So for example, say you get a credit card with Westpac, you get the sign-up bonus for that credit card, you then need to cancel it, and then you need to wait another full 2 years or so in order to get another sign-up bonus with Westpac. Now obviously you can get a different sign-up bonus with a different bank, hence why the credit card churning approach involves setting up new cards with new banks. Now this might be done every few months, perhaps as frequently as every 2 months, it could be done less frequently, but typically it's going to be done quite rapidly. Now typically a few traits associated with it are that you need to set up the card and you need to cancel it and you need to make that minimum spend threshold. Now then you'll get the sign up bonus for that credit card. So that's basically how it works. Now it sounds great in theory. The reason it sounds great is these sign up bonuses look incredibly lucrative. They look like you can effectively get a whole trip for free by getting that sign up bonus. So what it looks like is you just set up a new card as frequently as humanly possible to get all of these sign-up bonuses to get as many points as you could possibly get. There are, however, some downsides that should give you pause about taking that approach. Now there's a few major ones. The first major one is that it could dramatically affect your credit card rating, or your credit rating rather. Now the credit rating is basically determined by a few things, including the amount of credit you've applied for, but importantly what type of credit you've applied for. And in particular, if you've applied for credit cards very frequently, particularly in the last little time period, then that's going to dramatically and negatively affect your credit rating. So lenders, particularly future credit card lenders, are going to think twice about giving you credit. So for example, say you've opened up 3 cards over the past month. It's going to be very difficult to get a 4th card in the next month because that credit card provider is going to be very reticent to lend you money. What they'll think is they'll think you're either running out of money, they'll think you can't make your payments, or they think you'll transfer the balance from those existing cards to the future one because you can't make the payments and you're basically not able to meet your obligations as and when they're due. This is going to be a little bit less impactful with major secured credit, such as home loans or car loans, but it still is going to be an issue because they're definitely going to push into what types of credit you've set up. So it's going to affect your credit rating and your access to debt. That's the first major thing. The second major thing is that with this credit card churning approach, if you're doing it very rapidly, it might cause you to spend money you wouldn't have otherwise spent and or spend money you don't have. So credit card churning done methodically only involves spending money you already have and paying off those credit card debts immediately, because otherwise you'd be hit with interest when you don't pay off the debt. The other thing to bear in mind in relation to that is with some people, when they're signing up for these credit card bonuses, they're going to end up spending more money than they otherwise would. Now this credit card churning is all well and good if you have strata fees or whatever you'd otherwise need to spend money on. But if you weren't going to spend the money, then credit card churning ultimately becomes quite expensive because you end up wasting money that you wouldn't have otherwise spent. This is going to erode your ability to save, and it's obviously very harmful overall to your financial goals. Now the third thing to bear in mind that's also a problem is credit card fees. Now credit card churning done properly is going to minimize the fees you end up spending, but if you're just doing it haphazardly, as many people would, they'll end up spending a lot of money on credit card fees, because when you set up multiple credit cards, you'll often be hit with multiple credit card fees. Now sometimes you don't exactly know when those fees are going to be coming along. Whether it's going to be quite quickly after you've opened it up or a full year afterwards is not always clear, so you might end up being hit with credit card fees you were obviously trying to not have to pay. Now this is obviously going to be quite expensive. The credit card fees won't fully erode the benefit of the frequent flyer points you might otherwise get, but they're obviously expensive and will diminish the returns you might otherwise expect to get from this credit card churning approach. This, coupled with the expenditure you might not make and the interest you might be hit with, makes credit card churning potentially expensive if you're not doing it ultra methodically. So those are the 3 major reasons I wouldn't personally rapidly credit card churn. A, the hit to the credit rating, B, possibly inducing you to spend money you wouldn't have otherwise spent, and C, the credit card fees that can rapidly accrue when you end up doing this credit card churning approach if you do it too rapidly. So this begs the question of, is there a way to get access to some of the benefits that would be otherwise coming from credit card churning without those major disbenefits, in particular the major hit to your credit rating? Now the real way to do this is really just going to be opening up a new card at very infrequent intervals, so maybe one every year. The reason you would do it this way is that if you're opening up a new credit card and obviously cancelling existing credit cards every year, then a couple of things arise. First, you can typically just be paying one credit card fee per year, which is great because you don't want to be paying too many credit card fees. Secondly, it's not going to hurt your credit card rating, or your credit rating rather, because lenders are typically not going to look too dimly on having a new credit card each year, because that's typically not too abnormal. It's where you're opening up a new one every couple of months that it starts to look very bad to credit providers. So doing it every year, however, is not going to be such a huge problem. In particular, if you can show you cancelled your prior card, then it's not going to be a major problem at all when you're trying to borrow for a home loan or borrow for a car, because you'd easily demonstrate that you don't have that much credit open and you hadn't been rapidly applying for cards, and therefore it doesn't look like you're running out of money. So it's going to avoid that hit to your credit rating. Now the third thing is you still get most of the advantages of credit card churning. The reason you get most of the advantages is some of these sign-up bonuses, particularly for some of the major credit cards, are really quite lucrative. They can pay for the overwhelming majority of the flights to a particular destination. So typically the sign-up bonuses are so large for some of the cards that they will deal with a lot of the costs associated with one trip. Now maybe not all of the costs, and you might not get all of the trip paid for on points, but you'll get a large amount paid for, which will make the trip much cheaper than it would otherwise be. So you'll get the lion's share of the benefit you'd otherwise get from these credit card points. Put differently, you don't necessarily need to churn credit cards every 2 months, because you don't necessarily need that many points to deal with a trip. It can often be sufficient to just have the points from one card. If need be, you could do this say every 9 months, which would still obviate many of the harms associated with the credit rating hit if you just do it every 9 months as opposed to doing it like every 2 months, which is obviously going to cause problems. So my approach is really to set up a new card at relatively infrequent intervals to still get those points on a yearly basis for a trip that I could spend the points on without having to go through the whole hit to my credit rating, without having to spend too much money that I otherwise wouldn't have spent, without risking being hit with major credit card fees that I don't particularly want to have to pay. So those are the major reasons I take a much slower approach to getting points from credit cards. Now that's not to say there aren't ways to optimize credit card churning. Certainly people dedicate time and effort to optimizing how to churn credit cards to minimize the hit to their credit rating. But typically that takes a lot of, effort, to be honest, to track what you're doing in terms of these credit cards, and often it's prone to errors in terms of setting up the credit cards, cancelling them, and also making sure you meet the minimum spend thresholds without spending money you wouldn't have otherwise spent. So that's the reason I take the more methodical approach. Nevertheless, I hope this video has given you some insight into credit card churning, why it can sometimes be a bit of a problem, particularly in Australia, where credit assessors will assess you based on the type of credit you get, and particularly how rapidly you're applying for credit in a given time period, and why it can sometimes be costly to go through that churning process. I hope it's also given you some idea about how to get some of the advantages from credit card churning while minimizing some of the disadvantages. So I hope the video has been interesting to you. If it has, it would be great if you click the like and subscribe buttons, and I hope to see you next time. Bye.